Coronavirus has changed all of our lives, but how will it impact our future? Does this change everything? I am Antonella Santi. In this episode of Does This Change Everything?, we discuss how coronavirus will impact private credit and the European economy. To find out, we spoke to Francesco Battazzi, head of diversified debt funds at the European Investment Fund. Does the coronavirus crisis change the future of alternative lending?
It does. In the short term, at least, alternative lenders represent an alternative to bank financing for a growing number of businesses in Europe. Credit funds, in particular, raise money from institutional investors like pension funds to provide lines of credit for companies. They provide basically SMEs with a broader choice of financing options, as well as, on the other side, offering investors an asset class that links institutional savings with the growth of Europe's real economy. COVID-19 will have a severe economic impact across enterprises of all sizes. Given the massive disruptions on cash positions and supply chains for European enterprises, I believe kickstarting the economy won't be an easy push on the button once physical distancing is no longer needed. In general, what I like about credit funds is that they are closed-ended, meaning that unlike banks that predominantly depend on short-term deposits, closed funds have investors' commitments that are there to stay in the long term, until the fund maturity, and they can provide patient finance to SMEs. In times of crisis, actually, investors will not rush for asking their money back, but will rely on fund managers to do their best to keep funds performing well, even in troubled waters. And in such a way, credit funds have a counter-cyclical investment behavior, and in a market downturn, they keep supporting strong new businesses opportunities. Now, having said that, the private credit market, which developed after the 2009 financial crisis, is being tested for the first time against an economic downturn. Basically, the asset class is building its own performance track record as we speak.
What challenges does the market face now?
In the short, medium term, I see three types of challenges for credit funds. First of all, at company level, strict measures are being taken by companies financed by these funds to maximize their cash conservation. They are applying for the deferral of taxes, for state-paid unemployment. They are also trying to open short-term facilities, mainly with banks. And so for the time being, long-term investments have been stopped. And actually, this is one of the main issues. The second challenge is that fund managers' investment activity has slowed down given the uncertainty. And we see at this stage a sort of bifurcation between stronger sectors and weaker sector, yes, but in general, it has slowed down. And the third challenge is that we see an important problem for credit fund managers as they seem to miss the availability of investors' capital. At this stage, investors are basically not willing to invest in credit funds since they are still trying to understand what is going on.
What new products or approaches might be needed in debt funds to cope with this future situation?
With the main issue for European enterprises being liquidity during the shutdown to compensate for lack of revenues, the immediate reaction of our fund managers has been to get in touch with their SME borrowers and help them dealing with the crisis measures announced by the member states. It's fair to assume that the bulk of credit lines will be provided by the banking system with access to public guarantee schemes in certain countries and sectors. But the approach of credit fund managers in the last 2 weeks has been to help with concession of payment holidays as needed. In particular, one of our funds has granted 3 months deferral of principal payments to all SMEs in their portfolio. And actually, this has been very much appreciated by the SMEs. In the coming months, I expect credit funds to focus on more short, medium-term financing, sort of 2, maximum 3 years, for the purpose of helping businesses to cope with working capital issues and debt refinancing. For example, fund managers will be typically providing add-ons on top of what they already gave in the past to the same company. We can also see credit market developing towards special situation financing as a way to provide support to those companies that need to address specific needs that would not be considered market standard debt financing and where bank financing is not available.
How difficult would it be for private credit funds to adapt, to develop new solutions?
While managers of credit funds are indeed adaptable, more adaptable than traditional lenders, their main constraint is availability of capital from private investors. Existing funds with significant commitments will be obviously best placed to engage in new business opportunities during the COVID-19 crisis, but it will be very difficult to do so for new fund managers, as they have to fundraise and convince investors that they have a strong investment case, even if they lack a track record and established network. And obviously in the current environment, I'm afraid this will be quite difficult.
What effect might this have on everyday life for citizens and for the European economy?
These days, most EU citizens are affected by the physical distancing and try to cope with this. We are affected by unavailability of certain products due, for example, to issues on the supply chain of enterprises. If an enterprise cannot sell its products, it will not have the money to buy supplies from someone else, and it's a sort of vicious circle unless banks or credit funds are there to provide new cash. More broadly, as EU citizens, we all strive to make our economy resilient in the long term, to make it more sustainable and environmentally friendly. We need to ensure employment and innovation for the current and for the future generation. Private credit funds have a key role to play in a resilient European economy, as the most innovative and fastest growing businesses often need a tailor-made finance package. So no two businesses are alike, and neither are their financing needs. For example, a technology company with intellectual assets may lack the collateral for a plain vanilla bank loan, or a fast-growing business investing in early profits in acquisition might prefer to make a single repayment at the loan's maturity rather than smaller payments throughout the life of the loan. And this is where a credit fund come into the picture to address specific financing need of our most innovative and fastest growing businesses to support the employment that they create. A particular sector of alternative lending is the crowdfunding platform sector, providing modern online lending solutions. It's a completely different experience compared to having to go to a bank branch, sit down and talk before starting a process that could actually take quite some time. I would say it is a type of lending fully compatible with physical distancing, actually. Crowdfunding is more and more reliant on institutional investors' money, and because of this, the private credit market is important to us as Europeans and for our economic environment. Do not have private investor capital to provide cash needed by SME, and therefore we need to keep strong the connection between institutional savings and Europe's real economy.
What will the European Investment Fund's role be in this new situation?
The European Investment Fund is supporting even more than last year the private credit funds, with a particular attention to funds focusing on SME, obviously, and we focus on new managers or, for example, on managers launching new funds in EU countries where alternative lending is less developed. The European Investment Fund supports a Europe growing private credit market by taking investments in credit funds, actually cornerstone investments in many cases, under a program that is called FC Private Credit Tailored for SME. The goal of the program is to channel private institutional investment into credit funds to support more market-based, tailor-made funding solution for the European economy, to increase the volume and diversity of alternative debt financing available to European SMEs, and more generally to contribute to the development of a capital market union by supporting a pan-European investment activity. With the main issue now being availability of capital from private investors, the European Investment Fund envisages dealing with the situation by increasing the EIF share in certain funds or increasing the EIF commitment at subsequent closing to ensure continuity in the fundraising. Unfortunately, a few credit funds we would like very much to support will be unlikely to close their fundraising this year, given the hostile market dynamics. With more support from the European Investment Fund, we show confidence in the market and encourage investors to continue investing in private credit funds.
Thank you, Francesco Battazzi, Head of Diversified Debt Funds at the European Investment Fund. This is Does This Change Everything? From the European Investment Bank, the EU Bank.